Lighter has been very famous among the crypto community. This is because of its airdrop, which is the 10th largest airdrop in crypto history. But there seems to be questions coming about in the community, as most investors and airdrop receivers are confused whether to sell or hold their lit token. If you're one of those who are confused, well, this video is for you. But before we start, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Without further ado, let's get into the video. Hey guys, welcome back to the Republic Labs YouTube channel. In this video, we will talk about Lighter and its airdrop, and whether you should sell your token or hold it. So, without yapping too much, let's get into it. If you don't know what Lighter is basically a perpetual DEX where you can trade futures assets and spot assets in the platform. It became famous due to its airdrop. As you can see here, around last week, Lighter distributed around $675 million in its lit token for airdrop hunters. It was one of the biggest airdrop in crypto history, ranking 10th in the largest crypto airdrop in crypto history itself. However, the hype doesn't last long, because Lighter itself sees around $250 million being withdrawn from its trading platform. Essentially, most of them are selling pressures. So, almost a third of the airdrop being distributed are being sold in just 24 hours after its airdrop. So this is a common thing in crypto, because most airdrop hunters want short-term profit. So after receiving their airdrop, they immediately sell their token, which is understandable, and which is why Lighter has come up with a lot of plans to keep their prices. This has made many investors, especially new ones, confused, because they don't know whether to sell or hold their token. Well, if you're one of those that are confused, this video might help you, because we will be giving information regarding Lighter itself. However, we will not tell you specifically whether you should hold or sell your token, because you need to have your own conviction and your own plan when investing or trading. However, we can give some information that might give you conviction on Lighter or make you sure about your trading plan. Before you get into that, we need to understand what Lighter protocol is. If you don't know what Lighter is essentially a perpetual trading protocol with its own application chain. So essentially, it is an app chain where the Lighter protocol itself is standing in its own layer 2 blockchain, connected to Ethereum. It uses ZK rollup for its blockchain, meaning it focuses on scalability rather than security. This is common in most DEXs, specifically perpetual DEXs, since perpetual future contracts require high transparency and high scalability. Because traders not only day trade on the platform, they also like to scalp. And scalping requires a highly scalable infrastructure because it requires fast transactions. So essentially with ZK Rollup, it provides a scalable infrastructure that focuses more on scalability and faster confirmation rather than security, but keeping decentralization, essentially coming back to the trilemma problem. You see, in blockchain trilemma, we have 3 problems, which is that a blockchain can focus on scalability and decentralization, but cannot also focus on security. A blockchain can focus on security and decentralization, but cannot focus on scalability as well. The last thing, a blockchain can focus on scalability and security, but cannot focus on decentralization. Meaning, usually, when a blockchain is focusing on security and scalability, it is not decentralized. So it seems that Lighter focuses on scalability and decentralization, leaving security as not the main focus. However, the platform is still safe. Since it uses ZK Rollup, it connects to Ethereum as its layer 1 blockchain or settlement layer. So all the data are being processed on the Lighter app chain. However, all the data is stored on Ethereum. So to sum up, Lighter is a layer 2 blockchain that only focuses on its own protocol and can be connected to Ethereum. As you can see here, the platform looks like this. You can transact spot assets and futures assets, where each asset has its own limit for leverages. As you can see here, you can trade Bitcoin with 50x leverages maximum, but you can only trade lit with 5x leverage maximum. Also, you can buy spot assets of Ethereum and lit and others as well. All you need to do is just connect your wallet and start trading. Aside from that, Lighter has its own portfolio management feature. As you can see here, you can track your total equity, cumulative profit and loss, and return percentages, with a time frame that you can choose from daily, weekly, monthly, and all time. Also, you have public pools, where you can essentially lock your money to earn passive income. The pools are built by Lighter itself and also by the community. with pools built by Lighter acting as a liquidity provider pool, but pools built by the community are gather funds from all users that they can use to trade and give profit back to the investors. As you can see here, the APR varies as it depends on the trader itself or the fund manager. It essentially acts as a fund. As you can see here, there are APRs ranging from 13% up to 200%, even minus 100%. This all depends on the fund managers, on how good they are, also on their strategies. So as a reminder, you need to understand the fund managers, and you need to make sure that they are legit. Also, it is worth noting that APR changes over time, so you need to be careful. Another feature is that Lighter provides API keys, so if you want to manage your fund externally, you can give API keys to the platform or the people managing your fund. However, you need to be careful, as giving API keys means giving access to your account and your funds. Lastly, since Lighter runs on its own app chain, it also has an explorer or a scanner to see transactions happening on its application chain or its layer 2 blockchain. So if you want to see transactions when you're experiencing lags, you can search the transaction data here and see whether a transaction is being processed or not. On paper, Lighter seems great. However, there has been a lot of food regarding the platform. The first one is the airdrop food. As you can see here, there were accusations that Lighter had done insider sale transaction during the airdrop launch. It is speculated that around $5 million up to $8 million were sold internally. However, later on, it is clarified by the CEO that less than 10% allocation of the airdrop or the token itself was given to liquidity providers, specifically external liquidity providers, to help airdrop receivers trade more liquid, essentially limiting the possibility that traders cannot trade, and essentially giving liquidity to the lit token. Once that's cleared up, another food emerges, as Justin Sun seems to withdraw $38 million from Lighter's liquidity pool. This has caused some selling pressure. However, traders seems to shake it off quickly, as this FUD doesn't last long. However, to combat all of the selling pressure happening because of the FUDs, Lighter has started its buyback program. As you can see here, they have managed to start their buyback program through revenues from that platform. However, it is worth noting that currently, Lighter doesn't charge transaction fees, so this might indicate that in the future, all the buyback programs will come from revenues from the platform, which means Lighter will start charging transaction fees for users. As you can see here, after the buyback program, a lot of people are noticing that the lit token is going up, essentially showing the bullish interest around it. However, the FUD doesn't stop. As you can see here, currently the CEO of Lighter itself is beefing with Hyperliquid. This beef or conflict has been happening for a while now, because the first one to fire shot is Hyperliquid, mentioning that Lighter's infrastructure is fragile. So as you can see here, currently this FUD is continuing. So this leads to a lot of debate whether Hyperliquid will be beaten by Lighter. However, if we take a look at data from CoinGecko, as we can see here, Lighter is still below Hyperliquid in terms of volume and open interest. So it seems the competition is still rough, as Hyperliquid still takes the market in the perpetual DEX market. So, coming back to the question, should you hold lit or sell it? As you can see here, according to technical analysis, there's not much to do, as on-chain analysis itself is still quite volatile. The only thing we can depend on is its uptrend. So currently, if lit passes through the $3 support, we can see a bearish momentum building. However, if it manages to hold above $3, the uptrend must still continue. But it is worth noting that this is still unsure, as volatility is still high. So a disclaimer, this is not an official or legal investment or trading advice for you guys, as all the risk is bared onto you. You need to have your own conviction and trading plan to trade this, as we are not responsible for your profit or losses. Well, that's all the information I have today. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers, guys!